Hi, dear friends, aspiring chartered accountant. Yesterday, your exam was held for economics, which is a part of FM. My name is Professor Sengupta. I just want to help you with a detailed answering of that question, which carries 40 marks. So, without wasting time, let us start this. This is the question paper which is given yesterday from ICI. First question is given as one has to find out depreciation. One has to find out depreciation. First, let me explain that how to find out this. Read out the sum, then workout automatically will come out. So GDP MP is given, NNPFC is given, and these are the entries are given. So my first objective is, if I am able to find out GNPFC from here, so automatically GNPFC minus NNPFC will come out as your depreciation. I repeat, GDP-MP given. Our job is to find out from these all entries GNPFC minus NNPFC things will come out. So now I'll work out this. 7A. GDP-MP is given as 876532. GNP-MP is nothing but GDP-MP plus NFIA. Now put these values. 876532. NFIA they have given minus. So plus a minus 232. It comes to 876300. GNP-MP has come out. Now to find out GNPFC. Acha beta, how do find out GNPFC? GNPMP minus net indirect tax. So what is net indirect tax? Nothing but indirect tax minus subsidies. I'll put this value. GNPFC is equal to, it has come 876300 minus tax is 564, subsidy is 30, so it comes to 875766. So now depreciation. Depreciation is nothing but GNPFC minus NNPFC. Respective values, if we put, what we get? 876300. No, sorry, 875, I believe. The ultimate value comes out as 875. 875766. NNPFC is given as 846576. So my answer is 29190. Repeat once more. Careful listen. First one has to find out GNPMP. Then GNPMC, money GNPMP minus net indirect tax, and indirect tax, net indirect tax is nothing but indirect tax minus subsidies. So by calculating, my depreciation is come out as 29,000 sorry 192. This is the first question. 3 marks. Out of out, one is able to answer, one is able to score if he or she can answer this. Number B is discuss the guiding principles of W2 in relation to trade without discrimination. Without discrimination. Acha. Question number is 7B. 7B. WTO, everyone knows, nothing but World Trade Organization. So guidelines without discrimination. Without discrimination. It can be written by two ways. One, they have given MFN, another they have given NTO. So beta, what is MFM? MFN, most favored nation. And what is that? National treatment obligation. What is MFN? Specifically, it implies, it prohibits a country from discrimination between other countries. Obviously, main part, whatever is, main part is tariff only. Mostly this. This same way, it prohibits a country from discrimination against, difference is that, against other countries. Obviously, again, it is nothing but from the point of view of tariff. So I repeat, WTO guidelines mostly is MFN and NTO. More or less same, but only is that between these countries, most favored nations are exempted, and against other country, no one can impose for that. It is NTO. So developing country may be helpful on that. So next question, move on. Next question is, money performs many functions in economy. Explain those functions. I believe it is 7B, 7B, 7C, compulsory bunch. 7C. I believe you people know there is one couplet given by one good economist, was a Crowther. Then the couplet is, money has got four functions. How to make this? The couplet is, beta, money is a matter of function 4 a medium, a measure, a standard, and a store. Repeat. Money is a matter of function 4, a medium, a measure, a standard, a store. So under medium is what? Nothing but medium of exchange. So what does it imply? It overcomes problems of barter system. I believe everyone knows barter system was C-C economy, that is commodity versus commodities economy. But after innovation of money, that problems is sorted out and money is running as a medium of exchange, so that economy is in tremendous flow. That is the first point. Second point is measure. Acha, how do write measure? It is another English is nothing but unit of account. So how unit of account? Suppose 2 pieces of clothes is nothing but 1 kg of rice. So 1 kg of rice, to get one has to sacrifice 2 pieces of cloth. Similarly, for 1 kg of rice, if rupee is 20, so one has to give up 20 rupees to get 1 kg of rice. So the economy says it is nothing but unit of account, so that it can be measurable by unit. Second is standard. So how one can explain that? In modern economy, what is happening? All good transactions are there, like banking transactions, like loan transaction. Everything is possible with the help of money, because it is the most liquid form. And standardized value means everyone has to accept this. That is why money is also called, it is fiat money. Fiat money means it is authenticated by concerned government or central bank. It has to be circulated. Without obligation, one can accept this. And the fourth one is store. Initially, the problem of barter system was storing, but that problem is sorted out by money. How? Because all deferred payment can be possible by money. More specifically, so there are 2 types of market. One is called money market, another is called capital market. But these are the instruments, and these instruments can be only operated with the help of money. Under money market, instruments are treasury bill, call money, certificate of deposit, commercial paper. These are all due with the help of money. Capital market what? Shares, bonds, securities. So all bridging is possible by money. So at a glance, money has 4 functions: medium, measure, standard, and store. So next question is, describe the characteristics of public goods. Look at the standard question, I've seen that each and every question I've entered this time, they've made a perfect blending of all portion. Look, compulsory. Chapter 1 they have given. This is WTO. From trade they have given. This is functions. From money they are given. This is public goods, means public finance they are given. Now that number D part will take care. Public goods. First, it has been given by one of the greatest economists, Professor Paul A. Samuelson. So what is that? He has given alternate name as collectively consumption goods. Another name, or we call it as social goods. So what are the example? Means one individual if using, it doesn't hamper other individual. If one is using that part, so others should not be compromised on that. Example, common park, highways, bridges, street light, etc. What does it mean? If you visit to this common park, no one can prohibit me to visit. So now come to correct features. So features of public goods, so many features are there. Here we require 2 to 3 points. First, it is non-excludable. One has to know what is excludable. Excludable means if I have one property, means I have right on that property, you cannot include here. So this property is belonging to me. But non-excludable means the common park, the property owned by government, that common park you can use, I can use, everyone can use. It's non-excludable. Second point is non-rival. For private goods, it is rival, consumption is rival, but for public goods, consumption is non-rival. No private property right. So first, how to frame this question? Given by Professor Samuelson, two alternate names, collectively consumption good or social goods. Example, features, non-excludable is one uses means another can use, non-rival, no private property right. So compulsory portion, that is 7 A, B, C, D, 10 marks we are through. Now I'm switching to question number 8. Another lovely sum they are given from SKM. This chapter is called SKM. Let me explain, then I'll come to the answer. C is equal to 200 plus 0.60 YD. Main part is YD beta. YD money what? Income minus tax plus transfer income. People will be confused on transfer income, please, but you should not be confused. So it is my advice, first we find out the disposable income part, then automatically answer should come out. And what they ask us to derive, equilibrium level of national income, net export, consumption at equilibrium level. So one by one we'll find out this. It is 8A, number 8A. 8A. Careful. First our equilibrium concept is C plus I plus G plus X minus M. First beta C का value I should find out. C is equal to 200 plus 0.60 YD. So I'll do this numerical just to 0.60. So YD money what? Income minus tax plus transfer payment. So how to write 200 plus 0.60 y minus tax value given as 10 minus 0.20y plus transfer payment given as 50. So C is equal to 200 plus 0.60 is 0.80y plus 40. So C is equal to 200 0.60 into 0.80 0.48y plus 0.60 into 40 nothing but 24. So my C come out as 224 plus 0.48y. Look, from YD if we can make at a glance this, but I don't prefer this. It is always advisable my students should find out the value of the concept of C, then simple way just put this value. So simple way what? What do we know? Y is equal to C plus I plus G plus X minus M. So C just now I found out. To Y is equal to what should I write? 224 plus 0.48y. So I how much given? I given as 240. So how much? G given 150. How much export? 30 plus 0.2y. How much import? 400. Now simple carefully we'll calculate. By calculating it comes y is equal to 244 plus 0.68y. Therefore y minus 0.68y is equal to 244. So y is equal to 244 by 0.32. It comes 762.50. Means equilibrium income equals to INR 762.50. I repeat, first I just get this YD done, then simple way I put this value here. What value? This is C, this is I, this is G, this is X, this is M. Simple, attentively you should answer, we should get the calculation done. Second part is they asked to find out net export. Net export they asked to find out. Net export money X minus M. So what is that? 30 plus 0.2 Y means 762.50 minus import is this. So it is what? 30 plus 152.50 minus 400. So net export comes as minus 217.50. So beta, what does it imply? It implies adverse balance of payment. Just putting this value only, nothing else I did. Next we switch to what they are given. They ask you to find out consumption at equilibrium income. Consumption at equilibrium income. What is my C? C is equal to 224 plus 0.48. Y is 762.50. So C is equal to 224 plus 366. C is equal to, answer is 590. INR, of course, all are INR only. So I repeat, let us get the question once more. Question what they ask, they are given so many entries. First we have to find out equilibrium income. Then second part is equilibrium income we found out 762.50. Net export is minus 21.217.50. Consumption is 590. 515 we are able to score if we will answer exactly the way I have given you, sir. Exactly the way. First this, then this, and after that net export is this. Just simple calculation. Net export is this, so it is adverse, and after that consumption. I believe I am clear on this explanation. Those who want to get this calculation, you can pause and get this calculation, but concept is that only. Acha, next is B1, 8B1, fiscal policy measures which are useful for reduction of inequality of income and wealth. 8B1. Let us consider this answer. 8B1. Inequality of income, beta. Inequality means what? Gap between, first let me explain. Rich and poor is more. Developing country like India is this. So how to bridge gap? How to bridge gap? This is my objective. Now come to your answer. There are two policies, one is fiscal, now there is monetary. Here they ask fiscal policy. Under fiscal policy, more approaching options are, first it is progressive income tax. For your knowledge, Indian economy has been applied progressive income tax for long. What does it mean? It means richer portions are taxed in higher rate. Means if income increases for the people 10%, so tax will increase more than 10%. Means government can reap out more money on that, on them. Lower tax on lower class. So as the government can report this money from which portion more, I believe so many economies, foreign economies and Indian economies also suggesting now to avoid this distress or depression in economy nowadays. Indian government should impose more tax, heavy tax on richer portion, rich people, because so many elite peoples are there, so many Arabpatis are there in Indian economy. They have to impose this tax on more better so that it can be utilized for welfare of general people. Okay, come to this question. First is progressive income tax. Second is, this is a very good question, one that I have given, direct, now that is indirect tax. Second is differential differential indirect tax. What is that? It has got lovely two part, means higher tax on luxury goods, lower tax on necessary goods. It is one of the good weapons to reduce inequality, because lower class people will be beneficiary, those who are consuming most of necessary goods. Luxury goods is dream for them. Third point, you can give also careful public expenditure. What is careful public expenditure, beta? Careful public expenditure. What is that? Means planned expenditure of government, mostly on private sector. If it is planned expenditure on government, then it will be beneficiary. So 3 points are good for your answer. First, it is progressive tax. One I have given on direct tax. Another I have given indirect tax. Another I have given general expenditure point of view. Next. Sorry. Another important question, what is the impact of following credit multiplier and money supply if commercial bank keep less reserve and excess reserve? 8b2. After you have written this, 8b2, first one has to know credit multiplier. What is that? It is a multiple or fraction, or more specifically, it is a multiple or fractional form of reserve requirement by which commercial banks is able to create credit or money supply. That is how to write this. C is equal to 1 by CRR, cash reserve ratio. Some people call it as legal deposit ratio, also some people call it as, but CRR is more than enough on this. It's a common sense First, let me explain that excess reserve part. Two part I am explaining first. Then less reserve, easily it will come. Excess reserve part, let me explain first. Excess reserve, if it is more excess reserve, what is happening? Excess reserve, first I will explain. So what is excess reserve? One has to know first. What is excess reserve? Let me zoom out. Excess reserve implies that reserve which commercial banks hold with central bank in addition to CRR, SLR, or legal reserve ratio, one some economists call it as. So what does it mean? If now concept clear karo, if excess reserve is more, means what? Commercial banks is obligated to put more money to central bank. What does it mean? So their own source for creation will decrease. So what is my answer then? So should be excess reserve implies lesser money supply, lesser effect. I am telling it is more conceptual. Lesser effect of excess reserve. More specifically, I can write detailed language due to excess reserve, value of, it is more specific, credit multiplier decrease. So it does not have good effect on credit creation. This is credit multiplier part. They have extended this question with money supply also. More specifically, I am giving you, sir, money supply. So money supply means what? More specifically, it is total M. And total M money, it is nothing but small m into h. Acha beta, what is small m? That this is called money multiplier. More specifically, you can give answer for inter standard. Money multiplier. So what is money multiplier? It is more wider concept. Money multiplier is small m is equal to beta plus 1 by beta plus alpha. What is beta? Careful. C by D. C by D means cash reserve, cash deposit ratio. Cash deposit ratio. What is alpha? Alpha means reserve deposit ratio. If you are serious, but you can understand, R is here, reserve deposit ratio. As R is increasing, the value of alpha is increasing, so obviously money multiplier is decreasing. As money multiplier is decreasing, look, it is positive. Money multiplier is decreasing means the value is decreasing. This is the way one is to answer in CA. My answer is what? Excess of implies value of credit multiplier will decrease, as well as total money supply will decrease due to weak money multiplier. So I repeat, excess of implies it makes credit multiplier weaken, lower money supply, that is basic concept. But for interest, standardized answer should be must incorporate here concept of money multiplier also. What is concept of money multiplier? That is capital M equals to small m into h, and small m is nothing but money multiplier, and under this alpha is there. Under this alpha is there means it is also part of credit multiplier. This question also came. I'll just explain this. So credit multiplier is a part of money multiplier, whereas money multiplier comprises credit multiplier. So come to this question then. Question is what? Excess means both credit multiplier and money supply will decrease. Obviously rest means opposite concept. So for B2, exactly opposite things you have to write. This is B2 that part, and B2 excess reserve. Excess reserve I explained, and for less reserve I'm helping, it will be good for you. Opposite illustration should be given. Next question number 9A1. Heckscher-Ohlin theory of foreign trade can be stated in the form of two theorem. 9A1. Let us explain this 9A1. Before that, just rough. This is not writing. Please rough. Don't write in answer. For your knowledge, trade theory is first given by Professor Adam Smith. That was called absolute advantage theory. Then it is criticized by Professor Ricardo. Even if absolute advantage, without absolute advantage, Adam Smith says no trade is possible, which has been advanced by Professor Ricardo. He said comparative cost theory by opportunity cost. Comparative cost theory means country A is comparatively better than country B because country A is comparatively better than country B. This part only he has given, and country B is comparatively better than country A. Then country A is able to export X, country B is able to export Y. Irony is, this classical economist was Ricardo could not explain why comparative advantage has come. Modern economists, Professor Hickson and Professor Allen, have given the answer of this. What they answer? Simple way they answer. That this cause is nothing but two part. One is factor endowment. What is factor endowment? Is one country is having abundant any good factor. Say USA has got good capital. Indian economy has got good amount of labor. So they are abundant in capital, we are abundant in labor. As it is factor endowment, next point they have given factor intensity. So of course, US is able to produce more capital intensive technology and will be able to produce more labor intensive technology. That is your basic concept. Now I'm coming to my answer. Answer is what? Heckscher-Ohlin theory can be given by two ways. One we call Heckscher-Ohlin theorem. Another we call factor equalization theorem. Let me explain first Heckscher-Ohlin theorem. What is that? Heckscher-Ohlin theorem. I said just now two things are there. It is dependent on factor endowment factor endowment and factor intensity. So what is factor endowment? Means abundant. What is factor intensity? Means efficiency. So if I write country A and country B, say, if I write K1 L1 greater than K2 L2, better taking production function Q is equal to function of K comma L, means production is a function of capital and labor. So K1 L1 greater than K2 L2 mane this country A is efficient in capital. Obviously country A should produce and export capital intensive technology related goods, because K by L greater than K1 L1 greater than K2 L2. On the other hand, country B would be beneficiary for labor intensive product. So first concept is Heckscher-Ohlin theorem means two important part. Once more, factor endowment is the availability of factors, factor intensity is efficiency of factors. So then to explain that way, any example I can give. So country A should produce capital intensive, country B should produce labor intensive. Followed by second theorem, that is called factor equalization theorem. Factor equalization theorem. Factor equalization theorem. Acha, factor equalization theorem is what? Let me make it side again. What does it mean? If there is a free trade with two countries, so what does it mean? Price should be same in two countries. Simple way. If there is free trade between two countries, I'm writing again or call out so that it will be helpful. There is free trade between two countries, then price of product should also be same in two countries. Common sense, because it is movable. Another way, same way, factor-wise equations, they have said that if there is if there is free movement of factors of production between two countries, common sense, price of factors also remain same. That is why it is called factor price equalization theory. Listen now, don't look. Heckscher-Ohlin theory can be described as two-way. One is called Heckscher-Ohlin theorem, another is called factor equalization theorem. Then under Heckscher-Ohlin theorem, mainly dependent on two parts: factor endowment, factor intensity. So obviously, which is factor endowment? Developed countries are abundant in nature with capital, so obviously they will go for capital intensive technology. On the other hand, developing country like India is pro to labor, so obviously labor intensive technology should be applied, and if they exchange these two type of goods, it would be beneficiary. After that, factor utilization theory, both price of the product or factors of the product, price of factors of production, both would be same if free trade is possible. I'm showing you the writing again. Free movement of factors of production between two countries. Those who want to write, you can pause and write please and scroll out. Because of time frame, explain that. Now moving to next question. Those who can write, please on your own, pause your screen. Acha, next question is Lemon's problem is a lovely question. Lemon's problem is an important source of market failure. 9A2. We're going to 9A2. Lemon's problem. Well, it is a part of market failure. Let me explain you this first. Market failure, one of the reasons of market failure is incomplete information. Other economists call it as also asymmetric information. Like dentist, doctors, lawyers, car mechanic, showroom of used car. Just I'm sharing one story with you so that you can understand properly. The terminology lemons problem has come out from US economics. What is happening in US economy? Listen, US economy, mostly people used to sell luxury car after 1.5 year, and there's a lot of market for used car. Obviously, it should be luxury car. So, on typical psychology, look, one person enters into this showroom of used car, and there are so many cars are in display, but the car which has got lemon color, the person who enters, he will see this car first, and he will ask question on this car to this owner of showroom. How much it is, what are the parts used and all. Sir, no matter, the car which is lying side of this lemon car may have more higher technical specifications, more quality product, but since this is lemon, the color is lemon, people should go in for that, means people are preferring that. And used car owner rips out the opportunity. What rips out the opportunity? Well, obviously it is good car and used car, but whatever is not there, they will charge this. Suppose I am given example, say actual price should have been INR X, but he will charge price is more than X, means actual price means this is equilibrium price. Equilibrium price may be rupees X, rupees 5 lakhs, but he will charge 6 lakhs because the color is lemon. Why I said all this story? Because one can understand it is nothing but incomplete information, it is nothing but lack of symmetry between the knowledge of buyers and sellers. Because if dentist says that these are the teeth are not good, am I supposed to know all these things? I'll go for that. Maybe the equilibrium price should be 10,000, but because he explained me, I might have spent 15,000 on that. Similarly for car mechanic also this. Now come to inter. Lemon's problem is obviously the part of market failure because it is the outcome of incomplete information or asymmetric information. Asymmetric information means lack of symmetry between knowledge of buyers and sellers. And Lemon's problem implies that actual price, equilibrium price, is lesser than whatever charge price. The gap is nothing but market failure or underutilization of factors. Whatever. This is not required for answer. I just explain you. So this part 9a, two parts are gone. Now 9b, M3. Look, another tweety sum. M3. M3 means M1 plus TD beta. Again M1, don't write anything. First listen carefully. M1 is equal to C plus DD plus ODL. Give calculation. C means currency. Well, this is that. 2 lakhs something. DD. This is also given perfect. Other deposit. Here people will be confused. So this not required because a part of M3. Not required. This is a part of M4. Other deposit, simple way they are given this. Lovely. But when tweety things look, Here they have written including government deposit. This is a trap for inter student. Why trap for inter students? Because 90% students, except my student, cannot understand that government deposit is there. Means you don't have to add further. Government deposit is included here. Look at the value is less. So what we add? This and this. M1 will come out. TD is given. So automatically answer will come out. This is my explanation. Now I'll go to this answer. 9B2. 9B2. M1 equals to C plus DD plus OD. I'll just put this value C money given as 225,432.6. DD given as 340,242.4 plus OD given as 392.7. Check once. 225,432.6, 340,242.4, 392.7. So by calculating it comes 566,067.7. 566,067.7. So M3 is equal to M1 plus TD. TD means time deposits. Plus TD is given as 280,736.8. So M3 is equal to 846,804.50. Check once more. M1 is equal to C plus DD plus OD. M1 value I put. Sorry. DD and then OD. Simple clerical job calculation. After that, we got this 846,804.50. Next is clarify the concept of APS. Heckscher-Ohlin done. This is done. Clarify the concept of APS. It is A9B2. 9B2. 9B2 second part. APS. But APS means what? Average propensity to save. So it means APS is equal to S upon Y, where S is nothing but saving, Y is nothing but income. So APS is the ratio between saving and income. They ask you by example. If I take one example, say C is equal to 100 plus 0.2y. This is a consumption function. This part is autonomous, this part is MPC, this part is income. So income is equal to C plus S. So obviously I can write S is equal to Y minus C. The next line I should write, instead of C, 100 plus 0.2y can I write. So what does it imply? S is equal to minus 100 plus 0.8y. Where it was autonomous consumption, it is negative autonomous saving, and it is MPS. Either one can give this way, or one can add table also. What table? Income, consumption, saving, APS. APS মানে S by Y. Income 0, 100, 200, 300, 400, 500, 600. Arbitrary I am taking. Consumption say 50, 100, 150, 200, 250, 300, 350. Let's check. 1, 2, 3, 4, 5, 6. Saving first is minus 50, then is 0, then is 50, then is 100. This way we can go ahead, and EPS also will go ahead like this way. You can take care of this. Once more, average propensity to save is nothing but ratio between saving and income. With an example of linear equation of consumption, we found out S is equal to, then you can give an example by numerical table also. I believe it is clear for you. So next 10A1. 10A1 externalities. Explain the various type of externalities. Look at the question distribution, lovely distribution. This one they have given public finance, this one again national income, they blend that. No portion can be left out. Question number once more, 10B, 10A1. 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 So what is externalities? Suppose, let me explain that. Suppose you have one rich neighbor who is alcoholic. Every evening after filling up his tank, when he usually comes at night or evening, he makes some nuisance. So he is doing something, but you are affected. Similar, on the other hand, suppose one chemical factory dumps wastage to river. So his job is done. But the fisherman, their average cost increases. Person who is having as drinking water, that is also increasing. So it is activated by someone, but it has got spillover effect to other. So externalities is what is nothing but spillover effect to others. Not directly made any action. But he is having the impact of this. Externality concept mostly given by Professor Musgrave, Professor Samuelson, Professor Pigou. Most of the people have illustrated that. It can be parted in two ways, sir. Can be parted in two ways. What two way? Either we call it as external benefit or we call it as external cost. Look at the way I'm making this. Again, external benefit can be made again in two forms. One is positive production externality. Another is positive consumption externalities. Simple way, one is production, another is consumption. Both are positive. On the other hand, after you have written this, you will go to external cost. External cost also in two parts we can take. One is negative production externality or negative consumption externality. But simple things. Now on one example you shared with your examiner. Positive production externality. What? Say one big firm makes road. So what does it mean? He is the beneficiary, but small firms are also benefited. Why? Because their average cost keeps on diminishing. Achha, positive consumption externality. What is that for consumption externality? Anything you can give. Nowadays, which is most important now, inoculation against contagious disease. I'm writing in perfect way. Inoculation against contagious disease. Now it is COVID, you know that. It has got good effect. Or any educated person in economy. Educated person in economy means he is not helping him also, but he is helping to gather knowledge for society also. Negative production externality, chemical wastage in river, negative consumption externality, smoking or alcohol, whatever you can write. Drunken neighbor, anything you can write. Just this is exclusive way one has to take. The reason I made this video, The externalities can be explained by spillover effect. Either it can be external benefit or external cost. External benefit also can two split away: positive production, positive consumption, negative production, negative consumption, associated with different example. I have given some example. You can give any example on this, but should be relevant for production or consumption. I believe it is done. Ten A2. Which method is used in India for measurement national income? Also state the method which is considered the most suitable for measurement national income of the developed economy. Another lovely question, 10A2. Ten A2. First one is to know, in Indian economy, national income is done by CSO, measured by CSO. But what is CSO? Central Statistical Organization. Central Statistical Organization. Measurement of NI. Acha. Usually NI can be measured in three ways: production method, income method, and expenditure method. Indian economy is not possible to measure. Let me write. In Indian economy, it is not possible to measure by one method, and therefore we require combination of three methods. Just one example as per your ICA book given. I am helping you. Agriculture sector, net value added method, or another English everyone knows, production method. Then SSI means manufacturing. Manufacturing, it is by income method. Then construction by expenditure method. Service by income method. So combination of three methods. When you answer this, you segregate this way, the way I have written. For agriculture, it obviously by production. SSI, mostly income, but production also. Constant, specific, exactly the things which your study material has given, I am getting this. I am giving you this, so that it will be helpful for the examiner to distribute marks. Service income method. Developed country. Developed countries, what is happening? Common sense. People perfectly submits IT file. Developed country. To common sense, what should come? Obviously income method. But for your knowledge as well as in your in USA some part and Switzerland some parts it has been observed that expenditure method also is applicable. Somewhere income method cannot be possible. So we take only consumption part or expenditure part. So what is our answer? Developed country, mostly income method, but part of developed country, both income method as well as expenditure method to be applied to determine national income estimates. Now 10b1. Let me explain this first. Lovely question they are given. Spot exchange means $1 is equal to 65. Then $1 becomes 68. So what does it mean? To purchase $1, domestic economy should spend 65 rupees. So it is nothing but direct quote. Whereas second part what is given? Dollar this is equal to INR 1. So it is nothing but indirect quote. There's these things to be answered. They are given three questions. One is nature. Don't write, just listen carefully. Nature, the way we should write is, first one is $1 is equal to 65. I'll write this, no problem. So it is direct quote. Second one is indirect quote. Next, base currency. So when you are talking about direct quote, beta, base currency is foreign currency and counter currency is domestic currency. And when you are talking about indirect quote, opposite. I repeat, when you consider direct quote means $1 is equal to 65, $1 is equal to 68. That time base currency is foreign currency and counter currency is home currency. And indirect quote opposite. Consequence. Simple. Common sense. Initially I used to take $5 product from USA, import. Now when money against dollar is increased, means value of money is depreciated, I have to put more money for import. The import becomes dearer or costlier. On the other hand, export becomes cheaper. That we will explain. Careful listen. 10b1. 10b1 ABC. Ten B1. First, what is written? Let me write. So given is what? S0 is equal to S0 money $1 money. What I have said 65. S1 is $1 money 68 rupees. Then S0 given as 1 rupee money $0.01625. S1 rupee 1 is equal to dollar 0.01. Oh, first one was 0.0125. Second one is 0.01625. Let me check. 0.0125, 0.01625. First one answer A. It shows Direct one shows direct quote as $1 is equal to 65, dollar one next S2 becomes 68, direct quote. Number 2 gives indirect quote. Number 2 gives indirect quote. Why indirect quote? Because here it is written rupee 1 equals to dollar 0.0125. It is S1 or S0. S1 is equal to rupee 1 is equal to dollar 0.01625. It is indirect quote. This is in terms of dollar, one is in terms of money. Now B. When you consider direct quote, what do you say? It is base currency is dollar. Counter currency is INR. When you consider indirect quote, common sense, on the basis of dollar only, a value changes. Indirect quote, base currency is INR, counter currency is dollar. So A answer is this. B answer is direct quote, base currency, indirect quote, this. C, common sense. That is, one is export part. Write this, make it more this way. Another is import part. So, in this case, depreciation of domestic currency, correct? Because $1 is equal to 65, it becomes $1 is equal to 68. So what is that? The value is depreciated. Domestic currency value is depreciated in terms of foreign currency. So common sense, exporter should gain as for each unit of foreign currency they are getting more amount of domestic currency, more amount of domestic currency. Exporters gain. What about importer? Obviously, importers will lose. Why? Because they are engaging more domestic currency to import against dollar. I repeat, depreciation of domestic currency means import becomes costlier because they have to purchase more dollar. To purchase same amount of dollar, they have to put more money on domestic currency, whereas exporters are gaining because they are gaining. Why they are gaining? Because the money which they used to get prior to depreciation should be greater than the money after depreciation is domestic currency. So see effects: exporters gain, importer lose. Logic is this: exporters gain because for each unit of foreign currency they are getting more amount of domestic currency. Importer lose because they are engaging more domestic currency to import against dollar. Specifically, they have to put they have to put more domestic currency for dollar. They have to put more domestic currency for dollar. Then last question: the deposit multiplier and money multiplier, though closely related, are not identical. So what is deposit multiplier or credit multiplier? Other question also I explained, but still here I am giving you. Take it here so that it will be helpful. Deposit multiplier. So what is this? Same as credit multiplier. Still I am writing deposit or credit multiplier implies basic money supply creation process of commercial bank, which is determined by fractional reserve of banking system. I repeat, deposit multiplier or credit multiplier implies basic money supply creation process of commercial bank, which is determined by fractional reserve of banking system. How do you denote this? 1 by CRR. Now the people also call legal reserve ratio, LLR. Acha. Now money multiplier. This is a wider sense. I explain another question also. Money multiplier. What is that? Money multiplier reflects the amplified change in total stock of money with the help of high powered money. What is that? M equals to small m into H. Capital M is equal to total stock. Small m is nothing but money multiplier. So it is called high powered money. After that we'll write money multiplier is equal to beta plus 1 by beta plus alpha. Again, beta is equal to what? C by D. So what is C by D? Cash deposit ratio. Alpha. R by D. What is R by D? Reserve deposit ratio. So those who are serious bacha could understand credit multiplier is 1 by CRR, right? Means reserve. The here R is here only. Means credit multiplier is a part of money multiplier. So as credit multiplier changes, obviously money multiplier also changes. But to explain examiner properly, we should write, first we write this, then we can write credit multiplier is a part of money multiplier under alpha. Alpha means reserve deposit ratio. Those who can recollect this, that question I have done, that when credit multiplier, when excess reserve was there, one question they are given, just 1 minute, let me recollect once more. When excess reserve is there, means commercial banks are putting more money to RBI in addition to CRI SLR. What does it mean? Commercial bank own reserve keeps on diminishing. So they cannot create more money supply. So credit multiplier becomes weakened, money supply becomes decreasing. So as credit multiplier will become weakening, means alpha also become weakening. What does it mean? Money multiplier also becomes weakened. Why I said this? So that you can interrelate that. Some people get confused with the credit multiplier, deposit multiplier and money multiplier. My students should not do this way. Once more. Credit multiplier, deposit multiplier is just creation of money supply with the help of commercial bank, denoted by 1 by CRR. Whereas money multiplier is giving more wider sense. Capital M is equal to small m into H. So M is equal to the beta plus 1 by beta plus alpha. Beta money C by D. Alpha money R by D. Credit multiplier is a part of money multiplier under alpha. Reserve deposit ratio. We can conclude this way. Money multiplier is wider concept and credit multiplier is narrow concept. Credit multiplier gives picture of commercial banks, whereas money multiplier gives picture of whole stock of money. Well, it can change also stock of money, but money multiplier gives more wider effect on this part. Those who want to write can write this. Money multiplier is a wider concept. Credit multiplier is a narrow concept. Let me check once more whether we have covered everything or not. 7a we have done. 7b, money performs, public goods, simple Keynesian model sum, fiscal policy measures, mostly 3, progressive tax, differential interest in differential indirect tax, planned expenditure. In this question B2, this is a related question. Credit multiplier is nothing but 1 by CRR. So excess reserve implies credit multiplier will decrease, money supply will decrease. So obviously money multiplier also will decrease. Less reserve means opposite of excess reserve. Heckscher-Ohlin theorem 2a. One is Heckscher-Ohlin theorem, factor price equation or factor equation theorem, anything can be said. Factor endowment, factor intensity. The factor intensity means those who are capital intensive should produce that, those labor intensive should produce that. This way. Lemon's problem, part of asymmetric information, lack of symmetry of knowledge between buyers and sellers. So buyers are exploited. M3, M1 plus TD. Trickiness is M1. You don't have to confuse with OD because including government deposit they have given. APS, nothing but ratio between saving and income. Externality I have said in two format. One is external benefit, another is external cost. Under external benefit, again two part. Positive production externality, positive consumption externality. External cost, negative consumption externality, negative production externality. Examples, any example you can give which affects production, another is which affect consumption. Acha, national income measurement for Indian economy, combination of 3, CSO is doing that. For developed country, obviously income method, but some special cases expenditure method. Here it is direct quote, indirect quote. For direct quote, base currency is foreign currency and counter currency is domestic currency. For indirect quotes, exactly opposite. Achha, depreciation of domestic currency implies import becomes cheaper because more drainage of money. Exports become dearer because more money is coming out of foreign money. Deposit multiplier means credit multiplier is a part of money multiplier, and money multiplier comprises of deposit multiplier. So my dear students, this is all about my explanation. My name is Sandip sir. My number is this. I repeat once more, 98301 65380. Any query you can ask me on that part. I'll be happy to help you that. I believe I could help you to answer this. Thank you very much. God bless you, beta. Thank you very much. God bless you.